looks like on a weekly basis. You'll see there's Canada, and then there's US, but then there's also various provinces and states here as well. And as we expand and more of you come on board as well, we can expand what those look like. And we get right down into city specifics so that you're getting weekly updates on either the state or a city that's important to you, so you can be empowered to understand if something has changed. So this is really, really powerful, and I'm very excited for you folks to be able to get that. For Toronto, we did a GDP, and what was going on is that Toronto was definitely on its way up, but it was less than Ontario, and it was less than Canada. So that wasn't ideal at that time. But because we're not looking, and Moran brought this up earlier, just a few moments ago, we're not always looking at just the economy, because that's only a part of the key. You know what I mean? There's lots of other components. And overall, what we found was, look at this population for the GTA was expected to increase like 49.8%. It did this massive historical dip, and now a massive projected upwards. And of course, it's one of the top areas for immigrants, and immigration is expected to reopen up this year. So we're expecting major influx. And the conclusion is a major buy signal for Toronto. Calgary, similarly, Calgary had, just in terms of the gap, these are historical, by the way. We did these in September. These are changing all the time. That's why you're going to want to pay attention to us always. And these numbers, these particular stats, while they're older, it's okay, because we've got the new ones going on, but you're getting a sense of how we're making decisions, what kind of information we're showing you, and what those signals are. And don't worry, if something's changed in terms of like, if Toronto were not a buy, don't worry, I would tell you that right now. Toronto's still a buy. Calgary also, we're seeing, look at this population. Okay, so that, again, GDP, it was okay. And it's improving. Oh my gosh, amazing. It's really improved. Latest data is exceptional. And look at this population growth rate by comparison to the rest of Alberta and Canada. It's a net winner. Population, where people go, people need places to live, and they make money, they make jobs. Vancouver, look at this, Metro Vancouver jobs. I mean, just stable, absolutely stable. Nothing like outrageous, but stable. When it comes to their home prices, again, we are seeing, and a little bit of that has shifted, but don't get caught up in the headlines right now, because they're trying to freak us all out. Like, again, don't freak out, because it's just, nothing is falling off of a cliff. There is definitely just a little softening. And by softening, again, I want to reiterate it. And Moran said this really well one time. It's like, what it means is, it's not that it's going to fall down. It's not going to be less than. It just means that it's not going to grow as fast as it has been. So relax, take a deep breath, and know that we are on a long expansionary period upwards, with just, again, the softening for 2023 and 2024. So Kelowna, we've done Kelowna. Kelowna, look at that population growth, way more than BC, way more than Canada. This is important. It's remarkable. I've been watching that market really closely. My brother is about to buy, so I'm helping him with his property. It's really exciting. And anyway, it's on fire, that's for sure, and we're expecting it. And so they have the lowest unemployment rates in Canada, and their economy is incredibly diverse and doing exceptionally well. So we have a really hot market for Kelowna, and a great projection. This is definitely a buy and hold. It's an absolute good location for the long run. Honolulu, see, look at this. We've got Canada and the US. There are very few that dive into these kinds of layers of depth and breadth that we have at the Real Estate Wealth Lab. So Honolulu, market analysis. Okay, look at this. This is the percentage of tourism. Who cares? Because Honolulu in particular, their economy is largely driven by tourism. There's some opportunities for some diversification. And until then, this is very important news. And they have now actually, what's really incredible about Honolulu in particular, Oahu, the island, is that they have now hit their tourist numbers that they had pre-pandemic on a daily basis. So that's cool. But guess what's not included in that? International tourists. Japan's not back. New Zealand's not back. Australia's not back. Those are their three primary tourist origins. Canada and the US have taken over in terms of tourism. So wait just a minute until that actually opens up, and this is going to go crazy. This is an absolute buy and buy now signal for Hawaii. tourism makes up 21% of Hawaii's economy. It's recovering. I think I mentioned that. And this tourism mix, it's absolutely wild. The population, this is why Honolulu I know there's people who are Maui lovers, you're Maui lovers, I understand it, but Honolulu is growing faster than Maui. And even though that's a surprise to a lot of economists, because urban centers and places where people can get jobs, et cetera, that's where, and still there's beach, sand, and palm trees, exactly. Oh, yes, Dawn. And 6 million Canadians can't even fly due to the mandate. So just wait till that is free. Thank you, Brian Peckford, Honorable Brian Peckford. If you're developing in Maui, there's even more layers of taxes, by the way, on Maui than there is on Oahu. So that's just something to keep in mind for developing. It's still pretty good. I mean, their jobs hasn't been that great in terms of unemployment. It's been pretty challenging for Maui. Honolulu has overtaken their growth, but this is what you need to know about Maui. Listen, if you love Maui and you want to do it for lifestyle reasons, then do it for lifestyle reasons. Not all real estate has to be that thing that's a massive return on investment. That's okay. When it comes to Honolulu and Waikiki, it is the most popular, it's the most populated, and therefore there's less risk. There's also some opportunity right now when it comes to all US real estate in terms of foreign exchange rate. It's good timing. And also when it comes to Hawaii, that floodgate of tourism, it hasn't even opened up. So surf is gonna be up, people, for sure. Miami, Florida. Whoa. I don't even know where to start except Florida. Wow. Great migration, mass resignation, great reshuffle, the affordability, and what I have called the place of refuge. It has now become, because of its politics, because of its openness, and because of its governor, basically saying it will not be shutting anything down ever again with regard to any COVID-19 government restrictions. And as a result, it's a refuge. And so people are moving there even without jobs. People are moving there even without an economic wither, and they're creating job opportunities. And that's why we're looking at our indicators as we're looking at, okay, you know what, we've got to have this as, we want to make sure that we're looking at population independent of GDP, because it doesn't go in that order and how much it weights. And population in this case is pretty incredible. For Miami, this is back in December. Their net real GDP growth was not bad, 2.7. Again, that's net. So the real GDP was 5.4. We like to look at net because that's the real actual up. That's good. So it's really actually moving in the right direction. And it's even better than that now. Rents are they're going up incredibly. That was back in December. They're now upwards of 30 some odd plus for year over year.